It's Wednesday, July 17th. It's hump day. I will say, what up? But RIP to this market rally. We have, we'll talk about it. Know where your support levels are. The big cap rally may have come to an end. The Qs are down almost 2%. Chips are down 3 and 4%. We got some issues. This is the somber Gary voice. This is the Jim Cramer, the hubris of that management. This is when Jim Cramer cried on TV. I mean, I wouldn't be surprised if he cried today on TV. We'll go over the Russell 2000, the crazy stuff in the Russell 2000. We'll go over the Taiwan issues, how you want to play that one. We'll go over, Bill Ackman's portfolio. I bought a big stock yesterday. Delta was up like 7%. The banks, it's soaring. DPST and FAS, they're your friend, Bank of America. We'll go over some of the refinance stuff, Shopify, Meta, Amazon, Google, how they're the best, and then the social requests and the scans. There's your entire episode. So let's go over QQQ because it's important. I draw these yellow lines in here because they're my support levels, and they're to say, hey, do I want to get out? Now, right now it's between 486 and 503. How did I get 486? Well, that was the high on this candle on June 20th. That was, the high is 486.84 right there, 486.84. Now, we hit it once. We hit it here on June 28th. So you hit it once, and then you hit it twice on this morning candle, and it didn't break through. So that's 3. Anytime, let this be your start for technical training. Anytime you have a line, if it touches 3 or more points, it has some validity. If it touches, the more points it touches, the more validity it has. So you've got this 486 right there. You could draw one down here at 476, 475, and you can see the volume levels when you draw these. And this is how Trendspider helps you. You can create these colors if you want. I've customized it for myself. I like the dark background. You can do a light background if you want. I've got the MACD, the RSI, moving averages, Bollinger Bands. I've got it all on here. But again, when you sign up for Trendspider, you have to set this stuff up. It doesn't come automatically like this. You have to set this stuff up. That's why I give you a discount on my paid newsletter when you sign up for Trendspider. It's secret. It's in the welcome letter. So, but you get a free 7-day trial anyway if you just want to set it up. I include all that in the welcome letter. But here, when I drew that line, I said, this was old resistance. It bounced up there twice. Bounced up there a third time on a candle. Old resistance turns into new support. So 486 is your support. Where you're trading right now, 488. What happens if you go below that? Maybe you want to look at trimming some of this. Because again, that 426 buy here, and this is what I talk about trimming and things of that sort. This is what I tell you about trimming. You're going to have what's called a button hook, what I call a button hook. It's going to come down here. Now, the Bollinger Band started to cinch up because you were trading sideways. You didn't have confirmation over that 9-day. This is simple reading charts. And so when you're under that 9-day and that 9-day starts to move south, what are you doing? Well, you're looking at the MACD. The MACD is moving down. The RSI probably moving down. There's more sellers than buyers. You're at 58. Now, you take this and you move it over to a weekly chart and you take a look at that. Well, look, you've got nothing but strength up here. Where's your first support is going to be about 450. Okay, that's going to be the high where it pulled off here back in April into May. Simple as that. Are we going into an extended down period? I don't know. I mean, again, today's move is just about Trump saying that Taiwan will have to defend for themselves and they may have to pay if they want us to defend them. Simple as that. And you see what that does to chips. And so the chip rally that was in the market is being taken out of the market because if Trump becomes president, we don't know what's going to happen. Let this be just a lesson. If you weren't around during the Trump presidency and you weren't investing, this is the type of thing that will happen. And it's not, it's not the end of the world. We're in a rally. He brought it back. Sometimes Trump wanted to do this while he was president. He thinks that the stock market ran too much. So he'll put out a tweet against Apple, railing against Tim Apple and saying stuff. He just brings it back. The volatility is good if you're a trader. It's not great for a portfolio. So understand that. that, when you make your vote, understand what you're voting for just based on past experience. And I'm not telling you which side to vote for because honestly, I could care less. Your right is your right. We have the right to disagree whatever vote you make. I haven't even said who I'm voting for, but I can't vote for Donald Trump. I don't think I'm going to vote for Joe Biden either. So RFK for the win. High five. But here, the cues, that's how you do the technical standpoint. This is just a blip. So he's not president yet. We don't know what's going to happen. We're in the middle of a political season, and you're going to have this volatility. But understand where we came from. And if you're trading with this 4-hour algorithm, you've got a lot of downside still in your profit here. If you took QQQ as a trade, you've got a lot of profit. I will do one of the social requests is TQQQ. You have to know charts if you're going to trade in a triple leveraged ETF. Do not listen to a douche on the internet like me that says, hey, TQQQ for the last 14 years has a 100% win rate. Take it. You've got to understand charts. We all have different risk tolerances. So one of the risk tolerances I have, I can't stand small caps. But I posted this morning. I read this morning. This chart, this is the best Russell 2000 2-month gains in history. And what happens next? This was published in December 2023. That's why you're seeing question marks here about what actually happened. Now, when you take a look at the chart, this outlier, by the way, you see a lot of green here. So that November to December IWM move, which we'll look in the chart, was very, very positive. And so you're seeing here the November to December move, some of the best in history. What did it do? It traded sideways before getting the big bounce up where it was today. So let's go to Trendspider. Let's look at the 4-hour algorithm. Let's look at this because I said, hey, your support is 190. Your resistance is 212. We blew through 212. At this point, right now, IWM is trading at 222, okay, in pre-market. It has not pulled back like the rest of the market. It closed yesterday at 224. You're trading at 222. So that puts the 212 still at support level. If you take a look at this weekly, I do think that you're looking at $244, the previous highs, where it goes. You got a good way up there. Tom Lee thinks there's 40% in this trade over the next few months. If you're going to buy the dip, just buy the dip. Again, this isn't a short-term trade. You're looking at the RSI at 69. Any kind of pullback you want to add to your position in this. I am going to start a position in this. I like this. I like this trade. I still think that there's movement up here. Again, this weekly shows you that this one with reducing rates can go up. And they've been screaming about small caps. I'm not changing my portfolio from a large cap to a small cap portfolio. I'm just adding some in my portfolio so that I can enjoy some of this ride. My portfolio will absolutely still be driven by large cap tech. So we talked about semiconductor slump amid export curb control fears, Trump's Taiwan comments. ASML is down 7%, Taiwan Semi is down 5%, NVIDIA is down 3%. The U.S. government is thinking of imposing the most severe trade curbs available if companies, including ASML, continue to provide China access to advanced semiconductor technology. That's what Bloomberg reported. In my mind, I think you take this opportunity to add to your position. Again, is the U.S. going to start something like a protectionist thing with NVIDIA chips, with AMD chips, with all of this stuff? I don't know. They want to curb China. 121 gets you below this 122. Now, has that been a good trade before? Yes. It puts you below this 50-day. It gets this MACD moving down. I have some at 130. Am I getting rid of it? Absolutely not. I added in a big way. 2 lots at 130, a couple lots at 120, high 120s. I'm not getting rid of this one. Earnings will come in. Earnings will be fine. And then you've got to worry about the forward stuff. That's where this is trading on forward stuff. So just be aware that this is what you're dealing with. Now, let's talk about your portfolio. Don't overcomplicate things. This is Bill Ackman's portfolio. There's 7 names in a $1 billion portfolio, a multi-billion, $10 billion. He's got Chipotle. He's got Hilton Worldwide. He's got restaurant brands, QSR, Google. He's got both Googles. He's got Howard Hughes, and he's got Canadian Pacific, CP. I mean, again, don't overcomplicate things. If you don't feel like you can manage a portfolio like that, just don't overcomplicate it. Now, I do have, I think, 30-something names in my personal portfolio. I do complicate stuff, and it's because I add, but I don't take out some stuff. But yesterday, I added in a very, very big way. MicroStrategy, about $1,600, $1,600 per share. And I'll tell you the reason why I did this. First off, 4-hour algorithm said get in at $13.96. I waited. I didn't wait, too long, but it shot up. And that should have been a signal for me. Now, why did I use the 4-hour algorithm? It makes you 626%. That's almost as good as buy and hold. This is a leveraged ETF. I view this as a leveraged ETF with Bitcoin. It's the same kind of thing. What he does is he takes out loans against his company's value, and he buys Bitcoin. And the MACD is low. The RSI is super high. I said I want to be in this one. I added about $20,000 worth, I think. I was up 1,000. I think I was up 5% yesterday, something like that when it closed. But, where am I today? Probably down. I mean, I'm at 1610. I'm not too worried about it. This one will move. I was down 5% like right after buying it or something. I mean, it will move a long way. But I put the strategy in place and I'm sticking to it. Now, will I get out when the algorithm tells me to get out? I might not. Because the other thing is, this has a timing element. August 8th, it's 10-for-1 stock split. If you don't think that Bitcoin retail traders who, are going to hype this up into this split rally, I posted a thing about it yesterday. That's going to be crazy, I think. So I'm looking at this one to gain its all-time highs. We talked about Bitcoin and crypto being the Trump trade. I do think that continues. So I bought a bunch of MicroStrategy. Do your own research. Understand you're buying into a super risky one. But I threw a bunch of money at that one yesterday. Pretty happy about it. It hasn't been fully taken out of the thing now. Now, here, Delta. We talked about today, $46 cross-up right here. Delta was way up. It was up 7% yesterday, okay? Look at where I put that line after its earnings. I said this may be the line where it comes down there. How did I get that line? Well, what I did was that $42, I took, the 4-hour. Let's go back to the 4-hour. I think I did a previous high where it bounced off. Yeah. So you see back here in December where it hit that, okay? December 15th, it hit that. It pulled back. Then it pushed back up in January. It pulled back. Okay, that's twice. Then you're seeing here in February, it spent about a week, it looks like, pushing up over 42. And then it finally made the push. And it got up there to 52. Where's this one going? I don't know that I'd necessarily buy into this one at 46, but I will tell you that 50-day looks like it's moving down. You have confirmation over the 9-day right now. And if you're into airlines, this volume profile up here at between 49 and 50 might take you up to 50. That's a nice 10% move from 46. So if you get pushed up there, your MACD is low. Your RSI is coming off 26 and 27 levels if you would have bought at 43. This was just too low. Any reaction in the market is an overreaction. Their consumer segments, they're split up into two. They added too much of the lower end tier. They were over it. They have to adjust prices. I still think you're going to see travel do fine. Now, am I buying and holding Delta? No, I'm trading Delta. Why am I trading Delta? It just looks like over the years, this isn't one you want. This isn't up bottom left to upper right. This is chop. And you get to that 52 level and you reject off it. So if you're buying at this 46 level, understand that more than likely you should be selling at 52. This is technical trading 101. It's not that hard. And maybe I'm Rain Man. Maybe I've looked at charts for years and I can understand it a little bit more. But I just like this. Now, we talked about IWM. What's the largest segment of IWM? IWM is like 2,000 stocks. The largest segment are the regional banks, KRE. Okay? This has a broken trend and it moved up on a gap. So let's look at KRE. Banks are reporting well. This could be what I talked about on Spaces. Well, I did talk about it on Spaces. So here's what you're looking at. This is the spider sector. So if we look at this and we go back here, this is back in, I'm going to try and pull it back to the banking crisis, because this is the regional banking. And I'll give you a couple of leveraged ETFs that are really good on this one. But here, this is August of 2023. Okay, that was after the banking crisis. We're going to go back to March of 2023. That's where I really want to see this one. And will it pull back? I don't know. I don't think it's going to pull back on this 4 hour. There we go. I'm just going to push it here. That's the banking crisis, okay? This was where Silicon Valley went bankrupt, and you're seeing it just drop off, okay? Let's take a look at a weekly. A weekly might have a better look at this, because what you're seeing here in 2022 is, hey, there was a huge drop off in it was 2023, it looks like. Let me pull this back. There we go. That's the banking crisis, February 2023. You really haven't recovered from that, but your banks have recovered. So how are you going to trade this one, the KRE? Well, what you're looking at now is you're looking at probably resistance at this 56 level. It's trading at 55.19. Your RSI here on the weekly is up, extended, but your MACD is not. So, again, if you want to trade this one, you can trade this one. KRE is not a bad one to trade. When you look at the daily, you're seeing it's just breaking out. Well, I should point out, this is the gap that I was talking about right here. On the daily, it goes from 52 up to 56. It covered that gap. You do have a gap down here, which is between 49 and 50. I don't think you've got a regional banking crisis anymore. Now, if you trade this one in the algorithm, you make 6%. That sounds like, Gary, why would I want to trade KRE when I make 6%? Because over 24 months, you lose 5% if you just bought and held it. And this buy here at 46, fantastic buy. Look at how the MACD continues up. Look at how the Bollinger Bands expand. Look at how right now you are getting a golden cross. So might be one you want to look into, but I will tell you there might be a couple of others that might be better trades on this. And one is FAS. This is a triple levered financial bull. Okay. It includes most of the banks. This is not just regional banks, but this is FAS. You're seeing the trade here, 101. Nice movement on the MACD. You are a little bit extended with that RSI. You're trading on the upper side of the Bollinger Bands. Are we to continue? Well, if you think it's going to pull back, then put in FAZ, which is the financial bear. This is the exact opposite. So if you think we've run up too much, then maybe FAZ is the one that you want. There we go. It got you out. Won't get you back in for a little while. Maybe you want to time it. I don't know. Banks look pretty damn good. Now, if you want to focus on the regional banks, then DPST is where you go. And you can Google these things. Just go ahead and Google triple levered regional bank ETF. It'll come up with DPST. There might be some new ones out there. DPST is just the one that I know. Now, when we look at this on a weekly, understand these triple leveraged ETFs are decaying assets. They are not something you want to hold on to. They will go, TQQQ, not something you want to hold on to. You don't own portions of the company. They are trading options. These aren't long-term investments. So you don't want to just buy and hold these things. But here's the regional, the bank, the DPST here in the 4-hour algorithm. Let's run this so that the entries come up. These entries and exits. That's the weekly. Here you go. 65. And you're trading at 98. Again, DPST makes you 5% over the last 24 months. Your average win is 32%. So if you can pick one of the winners. And how do you pick one of the winners? Well, you got to kind of guess. Your MACD's low. Your RSI kind of low. Regional banks are soaring. Might not have been a bad trade. And I brought up on Spaces yesterday, I think Bank of America, I think this is a $50 trade over the next 4 to 6 weeks. I think your old resistance turns into support. It could get to 55, which is the all-time highs. But I do think I'm long on this one. I like this stock. Here is the recent highs back in January 22, where it was 50. 50 is going to put you into a long-term, that's going to be a resistance level right there at about 50. But you're looking at this one getting back to all-time highs. Again, 55. Look at this way back here. This is before the banking crisis. Okay, this is March 2007. You were 54, 55. Maybe Bank of America comes back there. I like this one. I like this one a lot. One that was brought up on the spaces yesterday is TREE. Okay, we're gonna get rid of that one. And TREE, this tweet kind of hit me with that one. I had TREE in my thing. This is Lending Tree. Refi applications hit the highest level since August 2022. August 2022, remember, that was at the time when they were still raising rates and people wanted to get in at those great rates. Here you go. TREE. Look at that run from $40. This is a small cap name. Do you want to invest in Lending Tree? I don't know. Let's go over to Seeking Alpha and let's look how the quant rates it. Let's look how it trades. Let's look at all the financial information on this one. It's a small cap. This is in the IWM. This is, it was down 2% yesterday. Seeking Alpha analysts say sell it. The quant says strong buy. There's no news on this one. Let's look at the valuation of it. It's a $713 million market cap. Super, super small. Not something I would normally trade. 19 PE. When you look at the profitability, they have a 94% gross profit margin. They have a C because they're just not returning return on total assets. They're not doing very well. But you look at the growth, and they're growing. Lending Tree revenue growth down 29%. But look at how good they're doing with their free cash flow. Momentum A+. Again, 54%, 3-month performance, 6-month, 89%, 9-month, 343%, 1 year, 113%. So you take a look at this one, and if we go and we look at a weekly, let's look at the weekly first. Let's see, how's this trading? Well, it is upper left to bottom right. Do you have the bottom end? Your 200-day still moving negative. But what's big on this is the 50-day has started to move positive. So your medium term is still up there. Now, as far as the Bollinger Bands, look, they cinched up. You got movement above that 9-day. Now your RSI is a little high. Your MACD's a little bit extended. Not crazy. But if we pull this back, we're going to pull this back to its highs, which was February 2021. There's still some people holding up here at 112. There's still some people holding up here. I don't know. Seemed like an interesting one to me. And with this Carl Quintanilla treat, maybe that's something interesting. Now, the best long-term play is Amazon. I think Amazon's your best bet as far as long-term play. Let's go and look at this. Now, 190. We know that 188 should provide some support. It should provide some support. This one is seeing Prime Day growth. The one is reported 12% year-over-year increase in sales with a weak consumer. And then you've got the advertising stuff. You've got the NFL stuff. You've got Prime memberships that are probably rising. Again, 188, I think, is your support. It got you out here with an 8%. Are you getting back in? I think this is the best trade. Once Bezos is done selling at 200, this one will rip to 250. Is this a good trade right now? I'd argue that 189 isn't bad for long term. 5 years from now, 2 years from now, I think you're fine. Again, you just have to decide what's your time frame for Amazon. In my mind, I think this one's fine. I think you're fine on this one. Shopify. Let's look at Shopify. Shopify, I'm going to look at that one later. Shopify rallies after Bank of America turns bullish on revenue growth upside. This was up 9% yesterday. I think at certain times it was up 10. I've said it before. I think this one's an $80 stock. Why do I think it's an $80 stock? Well, it's got to get past 70 first. 70 is your first target, but there is a gap up here all the way to 76. How does it have to get past 70? Well, your 200 days moved now down towards 68. It's got to hold the 200 day. If it holds that 200-day, what you're seeing is this one trades sideways as the MACD resets to go back up. Now, your RSI quickly went into oversold territory yesterday. Quickly. Their earnings are coming up on August 6th. I think you're fine. Why do I think it's an $80 stock? When we look at the weekly, we can see the 200-day is trading right around 80, okay? And that's a previous high where it rejected off to a longer-term sell-off. And then you're seeing right about here, this is where it got to 72, rejected off. So that's $70, $72, that's where it's going to reject off. Now, this one got all the way up to 88, and it rejected off, okay? So I think $80 is what you're targeting. But that's where I've been holding Shopify. I think my average purchase price on Shopify is significant. So, but again, Amazon, I think, is your best long-term buy. I would add Shopify as well. Now, I'll include this from Evan. He put out a tweet. Meta, Wolf Research covered Meta with a price target of 620. Now, Trump comments again. He hates Mark Zuckerberg. He wants to reverse the TikTok ban. I kind of agree with him. He thinks that we need competition. This one's trading under its 200-day. Okay? 475. 475. The RSI sellers have just shown up on this one. Now, why? Is it crazy? No, I don't think the valuation's crazy, but you're looking at a previous high of 381. Now, you're also looking here this week, it got down to 414. I think your ultimate support level, if we take a look at this, we're gonna pull this to recent, we'll just pull it here, okay, where it started the sideways trade. Where is the volume? Okay, the volume, if it gets down under 450, you've got a long way down, okay, to build these volume shelves up. So is it gonna fit? You've got this MACD resetting itself while you're just kind of trading sideways. You've got the RSI resetting itself. They have earnings coming up on July 29th. Is it crazy? Is the valuation crazy? Again, Wolf Research says $620 price target. Now, when we look at this, the quant says it's a hold. Why? The valuation. The valuation's the only thing. We're in an election year. As long as Mark Zuckerberg doesn't go overboard and start spending $10, $15 billion on chips, you'll be fine. You know, the PEG ratio, 1.33, you're fine. You're fine. You know, profitability, you look at this thing, 81% margin. They are printing money. They have the ability to spend. They will go heavy on, you know, what is it, July 22nd, Jensen Huang. I posted it yesterday, Jensen Huang and Mark Zuckerberg together. This is in my mind, anything under 500, I think you're fine. I think you're fine. Algorithm has you out. Wait until the algorithm gets you back in. You know, wait until you have some type of confirmation that there's a bottom. Amazon just initiated coverage with an outperform of $250 per share. Wolf Research, again, initiated coverage on Google with an outperform and a $240 price target. These are pulling back. This is the time when you want to try and time, you don't want to time the bottom, but you want to try and find a place where you're comfortable buying in. Doesn't mean that you have to wait for the bottom. You know, again, this 178 buy, did it make sense to get out at 192? Probably. You know, MACD was crossing down. You know, maybe, trim a little bit. Pull a little bit off the top there. You know, same thing with Apple. You can look at these things and clearly see that hey, they're a little bit extended. Okay, social request. This is Envy. I think commented on Substack from the newsletter. The newsletter is free, by the way. If you want to subscribe to the newsletter, I give it free every day. The only paid one are the weekend stuff where I kind of make earnings calls and give you a little bit more guidance in my portfolio. But it's completely free. So if you want, and you can just comment back, ask me to look at a stock. CLFR. Let's see. CLFR is what I'm reading. What is CLFR? CLFR. I don't see CLFR. So Envy, CLFR. Can you look up CLFR? I can't find it. Envy, you got to tell me what it is. So if you're listening, reply back. Tell me what it is. I did get a comment to an email from Trey. Hey, I'm wondering what your thoughts on CAT are. I bought in at 325. It's looking to 360. Should I just take my profit? Trey, let's look at CAT. One thing that you want to know is that, look, Trendspider says CAT is definitely out of the bag. I mean, do you want to take your profits? I wrote back to Trey and I told him, I said, I can't tell you when to sell. I can't tell you when to buy. I'm just a douche on the internet and you should not be listening to me. Now, I can tell you the algorithm has you in at 333. This is it's up 0.21 today. Now, where do I think that it's going? I think there's a couple of places it could go. I think right here at 360, you're going to see maybe some pullback. You saw a couple of weeks here where it pulled back off of that, but your MACD isn't anywhere in that same position. Your MACD is about to cross up on the weekly. You're looking bullish. Now, your all-time highs here are at 382. That may be where it's going to. That's probably going to be a resistance point. Now, if you see this MACD move up and you see it reject off of 382, if you're in below this, in my mind, again, CAT is just one of these companies that's an iconic company. I would say that 360 is probably your first resistance point. If you see it break through there, I think you could go to this 380 mark. And I think if it breaks through there, just, if you want to sell it. But your Bollinger Bands are wide open. You're up top. I think you've got more room to run in this one. So I'd probably hold on to it. I wouldn't necessarily get rid of it, but I do think that this one is an interesting one. Jamie from Substack, again, the newsletter. I'm a huge fan of your podcast. I listen every day on the way home from work. I took your advice on TQQQ and went in at 7-1 at $74. Great trade, Jamie. Great trade on this one. I didn't take it. I wish I would have, but fantastic. Kudos to you. The first time of the month was great, but it started to cool off a bit, but I'm still up about 10%. Should I just take my gain and sell or stick it out? I know the tech market is suffering a bit from this rotation of small caps, Russell BS. So here's what it is. If you're going to take a trade like this, Jamie, and I said it before, you have to know charts, okay? You have to know charts, and you have to take a look at this. You can use my 4-hour algorithm as a guide. Something like this, I typically will get nervous, and I will sell out beforehand. Now, you're looking at 26% up from when it got you in here on June 6th. So you took this on 7-1. You're probably around this point at about 76. Right now, you're trading at, it looks like 76.87. You've probably lost it all. Again, and this is why I say you want to look at the charts. Now, do you get out of this one? I don't know. We talked about the weekly here. If we go the monthly, you're still up. This is 10 years. But if we change this to weekly, now this is just, mind you, this is just seasonality. It doesn't have, there's some things in the universe that mathematically all add up. And what happened? Well, we talked about the weekly here, how this one right here on the 29th, how it's been a bad week for TQQQ over the last 10 years. Hasn't been a winner. The previous week, 80%. This week, not great. Not great at all. So only 3 out of 10 were actual winners over the last 10. Yeah, I think you can go back to, let's take this back to 2010, right before right after the housing crisis. We'll take it back to 2010. So this is 14 years. It's the same. I mean, this week, again, the same, 33%. So you take a look at that. You got 71% next week. You got 50% the week after that. Again, TQQQ, do you want to get out of it? I can't tell you when to sell. I can't tell you when to buy. I can lead you in the direction, but you've got to know charts when you're trading this thing. The Bollinger Bands are cinching up. You're on the downside of the 9-day. Do you take some profits? Do you take your losses? I don't know. I mean, it is what it is. I think this one is probably just one that, you hold on to a little bit. I mean, that MACD setting up, you look at your weekly, it's a bit extended. I mean, that weekly is a bit extended, or do we have to come down? You're outside the Bollinger Bands. You got your big cap earnings next week. Do I want to hold a TQQQ A over a weekend, B into a big earnings week? I don't know. I don't know. Again, looking at the chart, I didn't take the trade. You'll have to make that decision for yourself. So Envy's on, he says it's CIFR. Shame on you, Envy. CIFR is Cipher Mining. This is a Bitcoin miner. It's Bitcoin. What more do you want? I mean, it's Bitcoin. $4.94. Trade it. Envy, I'm not going to tell you to absolutely 100%, this is an amazing, stock. It's a Bitcoin miner. Its valuation makes no sense. Profitability, they don't make money. It's a Bitcoin miner. You can trade it. So, if you want me to look at that kind of stuff, it's a trade. If you're going to ask me about, this has a $2 billion market cap. So it's bigger than LendingTree. So, again, I don't think this is a bad one. You're at your 52-week highs at $7. $7.06 is your 52-week high. Over 1 year, you're up 42%. Over 5 years, this doesn't even have a 5-year chart. But year to date, you're up 64%. Trade it. I mean, it totally makes sense. Let's see. There's probably one person that 7 cover it on Wall Street. And their average price target is $6.58. So there you go, Envy. Let's talk about Janet wants me to look at Sound, S-O-U-N. So Sound is one. This is an AI company that has some type of voice recognition. It learns. It's in, I think, Daimler Chrysler vehicles. Wall Street analysts have it as $7 price target. Take that with a grain of salt because, again, there's only 7 analysts that cover this. Now, it's a hold in the quant. And the profitability sucks. Their gross profit margin is 72%, but they're losing money. This is a company that's losing money. This got some hype, Janet, when it was found out that Nvidia put some money into this. I think it was hundreds of thousands. It might have been millions. That's like you putting $5 into a stock. I mean, it's like you buying 1 share of SoundHound for Nvidia with their net worth. It wasn't something that I thought was news, but it pumped the stock. You can see it here from $1.72. It pumped it up to $8.37. Simple as that. You're trading at $8. Your 52-week range, it goes up to $10.25. This is a hype train. This is one you absolutely want to trade. Okay. They just recently got some news that they were in Stellantis vehicles across Europe. So, do I want to trade in this one? Do I want to own this one? No. This could be one that comes out with a huge, a huge win. SOUN in the 4-hour algorithm. Let's see, it's tabulating. It makes you 679% over 2 years. If you just buy and hold, 83%. This is what the algorithm can do for you. It can help you get into this. You win 40% of the time, but your average win is 56%. Now, it got you in here at $3.92. You can use that. You can use the 65-minute algorithm that I provide you. Whatever algorithm you want, you can absolutely just trade it like this. The 65-minute makes you 246% over 8 months. If you bought and held, you made 192%. It just got you in at $5.81. You win 36% of the time. You better make sure that you have a reason to buy at $5.81. Doesn't look super strong to me. You got a gap down there, but you just had the golden cross. Is this just moving up into another leg? Maybe. I mean, again, this is one that I think you want to trade. So if you hear about a stock or you see a stock that's one of these large 52-week movers, not in the Dow because the Dow is made up of 30 stocks, but the NASDAQ 100, if it's up like 80%, it's got some hype around it. And remember, whenever you hear a stock that's got like 90% move or something, any reaction in a market is an overreaction. Just repeat that to yourself 9 different times. Okay, now let's talk about some scans. These are cross-ups in the 4-hour algorithm, and they show bullish tendency. Shop. This is down 3% after being up almost 10% yesterday, 69.71. You're trading at 67. You're retracing this gap down to probably 64. Do you want to buy it here? I mean, you don't have confirmation. It's below the 9-day. I would argue that this is one that you just buy and hold and you wait until it hits 80. I do think that it hits 80. Cardinal Health. Cardinal Health is one. This is I think it's an alpha pick. Honest to God, I think it's an alpha pick from like January or something. It's been 3 months, so I can talk about it. This is one that hasn't been a great one for them. And the valuation it makes no sense, but you can clearly see here that this previous resistance, let's pull it back. This previous resistance where it got there, I think twice, Yeah. So this is July of last year where it ran up, and then in October of last year, and it ran all the way up. That old resistance is providing new support, 95.41. Now we can go and look at Cardinal Health here in Seeking Alpha, and we can see it's a hold. It's a hold. Why is it a hold? The momentum sucks and the growth sucks. Healthcare, United Healthcare just came out. They soared like 10%. So, you want to take a look at some of this stuff because the valuation is fantastic. The valuation in this, it couldn't be better. Your sector is trading at a PE of 20. Your PEG ratio is under 1. Your forward PEG ratio is under 1. That's almost 50% below what the sector is. So Cardinal's 5-year average is 2.11. It's their growth that's the problem. And their growth, they're growing at 11% revenue year over year, but the leverage free cash flow is a problem. And so that's the issue with Cardinal Health. But is it one that you want to buy? I'd argue that my dad owns this one. I may add more. I've been looking to get out of it, but I didn't want to get out on weakness, and that valuation just interests me right there. Another one that has pulled back a lot that you may want to look at, again, I don't know, Lulu. I would argue I'm not a buyer of Lulu pants. We've gone over this before. I buy the Lulu knockoffs off of Amazon. I think they are just as good, and it's still valued high. So we can go over here to Lulu. And again, I post these things in the newsletter so that you can take a look at them. Their valuation is high. It's at 22 PE. The sector's at 14. You can see it's ranked 16 out of 34. What's another one that's up there? Superior Group of Companies, Tapestry, blah, blah, blah. You can take a look at all of these and say, hey, they're a little bit higher. Tapestry's got a 3.55 score in the quant. The valuation isn't bad at all. The growth is a C minus. Earnings per share C plus. So again, you want to take a look at these. We can take a look at one more. Intuit's soaring. Citibank. Or as South Park says, the Shitty Bank. Shitty Bank right here. Do you want to get into Shitty Bank? Well, Shitty Bank reported earnings. It's post earnings. It took that dip. Any reaction in the market is an overreaction. We're going back. You're going back, and when you look at the weekly, again, the all-time highs are here at 80, which provided you resistance. You're about to have a golden cross. Banks are just soaring. Shitty Bank we went over. So, again, remember, today's going to be a down day. I'm not seeing a whole lot. Simon Property Group's up 1%. United Health is up another 2%. Things that haven't been working are now working. Exxon is up 1%. Apple's down 2%. Amazon's down 2%. Let's see. Google is down 1%. Meta's down 3%. Nvidia's down almost 5%. Tesla is, down 0.35. So that's holding on. Taiwan Semi's down 6%. Uber is down 3%. So there's a lot of red in the thing. Just remember, we have soared in this market. So while you're seeing red today, and yes, my portfolio will be down well into the six figures today. Absolutely, I expect it to be down significantly. And IWM is up 0.83. When you look at these, you want to take a look at what's actually working. So what's working now, for the past week at least, since Thursday, since IWM really swung around, we've held that 212 level enough. That 212 is now support. It's been long enough. That 212 is now support. Do you want to buy in here? I would argue absolutely. According to Tom Lee and I am not a small cap investor. Am I putting some money into this? Yes, because I do think 244 is in there. Tom Lee, I think, thinks that 260 is your gain here. Could be 3,000. I don't know what he says. He blocked me on Twitter. So again, what hasn't been working is working. It does. One day does not make a trend, but this clearly is a trend. So if you have any questions, hit me up. I will talk to you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Take longer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.